July 7th, 2026. Finance 2030 starts now. 5 massive shifts changing money. CFOs turn to AI and stablecoin reserves. Corporate treasury goes 24/7. Corporate treasurers are embracing cutting-edge technology to transform how they manage cash flow in today's dynamic environment. Many chief financial officers, CFOs, are deploying predictive analytics and real-time dashboards to anticipate cash needs and respond instantly to volatility, instead of relying on static spreadsheets and monthly forecasts. This shift means treasuries are becoming more predictive and proactive, with continuous visibility into liquidity across business units and time zones. That's critical as global e-commerce sales generate cash around the clock. In practice, Treasury teams now monitor balances day and night, treating corporate cash almost like a satellite in constant orbit so funds can be redeployed at a moment's notice when opportunities or risks arise. Financial innovation is playing a key role in this transformation. A rising trend is the selective use of stablecoins, digital currencies pegged to fiat money, to optimize liquidity when traditional banks are offline. By holding modest stablecoin reserves, some multinationals can transfer funds between subsidiaries instantly and avoid expensive currency conversions or weekend delays. These digital assets can even earn interest on otherwise idle cash overnight. Of course, such moves come with a regulatory dimension. New laws like the US Genius Act and Europe's MiCA are bringing clarity to enterprise stablecoin use. And CFOs are working with legal teams to ensure any digital currency experiments stay compliant. Experts say corporate treasury is evolving into a high-tech nerve center for the enterprise. By 2030, CFOs might oversee a highly automated digital twin of their balance sheet, with AI-driven agents managing routine transactions and optimizing cash positions in real time. Businesses are optimistic that always-on treasury systems will boost efficiency and resilience, keeping cash flowing even amid global disruptions. It's a positive, futuristic vision of finance teams that never sleep, with intelligent controls preserving liquidity and seizing opportunities at light speed. Enterprises elevate risk management, AI tools, and new rules redefine ERM. Facing unprecedented complexity, companies are overhauling their enterprise risk management, ERM, practices with advanced analytics and real-time monitoring. From cyber threats to supply chain disruptions, the risk landscape of 2026 demands faster, smarter responses. Many organizations now use AI-powered risk dashboards to scan for anomalies across operations and finances, giving managers early warnings of potential issues. In boardrooms, chief risk officers and directors are treating risk data as a strategic input, not just a compliance exercise. The result is a shift toward proactive risk culture, akin to a mission control center scanning a spaceship's vital systems to avert problems. Regulatory developments are accelerating this risk revolution. Authorities have rolled out significant new guidance pressing firms to tighten oversight and accountability. In the European Union, the upcoming AI Act compels companies to assess and mitigate algorithmic risks systematically. In the United States, standards body COSO issued updated ERM guidance in 2026 emphasizing that risk management must be embedded in day-to-day decisions rather than isolated in annual reports. These moves carry legal implications. Businesses will need to demonstrate robust controls around everything from data privacy to model transparency. It's a clear signal that simply cataloging risks isn't enough. Leaders must actively manage and mitigate them under evolving laws. The future of ERM looks dynamic and deeply integrated. Experts envision continuous risk scanning, where intelligent systems evaluate emerging threats in real time and human leaders focus on high-level scenario planning. By 2030, companies may run daily risk simulations to stress test strategies against economic swings, market shocks, or even hypothetical ventures beyond Earth. Yet optimism prevails that smarter tools and stronger governance will turn risk management into a competitive advantage. Many executives see risk intelligence not as a brake on innovation, but as a guide for navigating uncertainty with agility and confidence. Instant payments break borders. FedNow and stablecoins revolutionize B2B transfers. The slow, costly patchwork of cross-border B2B payments is finally being challenged by faster networks and digital currencies. Central banks and fintech innovators are racing to enable near-instant international transfers for businesses. In the United States, the Federal Reserve recently proposed expanding its FedNow real-time payment network to allow cross-border transactions via approved intermediaries. If implemented, this would let U.S. companies send money overseas in seconds, a potential boon for e-commerce supply chains that depend on quick settlements. Many countries are similarly linking their domestic instant payment rails to break down time zone barriers and eliminate multi-day delays in global commerce. Businesses are also turning to stablecoins to complement these official systems. A recent industry survey found that over 40% of companies have begun using stablecoins, digital tokens tied to fiat currencies, for cross-border payments, reporting significant cost and speed advantages. By using blockchain-based tokens to move funds 24/7, firms avoid high bank fees and currency conversion markups. Some have cut international payment costs by a third. Still, adoption remains cautious as companies await clearer regulatory guidance on large-scale use of corporate crypto assets. Governments and industry bodies are working on standards to ensure these new payment methods meet strict security and compliance requirements. The vision of seamless global payments is coming into focus. In the next few years, paying an overseas supplier could become as quick and straightforward as sending an email, regardless of banking hours. By 2030, even small exporters might find it as easy to do business internationally as locally, fueling growth in digital trade. The key will be interoperability, making sure diverse payment networks and currencies can communicate with each other. If achieved, the world's financial system would effectively shrink, connecting far-flung markets like never before. It's a hopeful outlook, a global payment grid linking economies together as if they were neighboring planets. Compliance goes high-tech. AI fights financial crime amid record fines. Regulators worldwide are cracking down on compliance failures, and financial firms are responding by supercharging their RegTech, regulatory technology, arsenal. In the past year, authorities have issued some of the largest fines ever for anti-money laundering, AML, lapses, and other violations. In one case, Spain's financial watchdog hit a major bank with a €40 million penalty for weak AML controls. This enforcement wave underscores the high stakes of inadequate compliance and is prompting banks and fintechs to deploy machine learning and automation to monitor transactions in real time. Advanced algorithms can flag suspicious activity faster than human analysts, helping detect fraud or illicit transfers before funds vanish or reputations suffer. This tech-driven defense coincides with rising regulatory expectations. Watchdogs are encouraging companies to adopt AI and data analytics to strengthen compliance, and some regulators are even leveraging AI themselves to spot patterns of illicit finance. One challenge is making sure these AI-driven systems adhere to privacy rules and avoid bias. Even compliance tools must obey the law. Nonetheless, industry and regulators are increasingly collaborating to harness technology in the fight against financial crime. Looking ahead, many routine compliance tasks, from KYC checks to regulatory reporting, could be largely automated, making oversight more efficient and less costly. Instead of replacing human judgment, these systems will augment compliance officers, freeing them to focus on complex investigations and higher-level decisions. A robust, data-driven compliance function promises a safer financial system with fewer loopholes for bad actors, benefiting consumers and honest businesses alike. For an increasingly interconnected global financial ecosystem, advanced compliance automation will be vital to maintaining trust. The upshot is promising. Innovation and enforcement can grow in parallel, creating a financial world that is both dynamic and secure. Wall Street enters the blockchain age. Tokenized markets get regulatory green light. A transformation is underway in institutional trading and market infrastructure as regulators and exchanges begin to integrate blockchain technology into stock markets. In a pioneering step, U.S. regulators approved a pilot this year allowing the Nasdaq exchange to trade select stocks in tokenized form, effectively blockchain-based digital versions of shares. This milestone indicates growing acceptance of distributed ledger tech in mainstream finance. For now, these trades still settle through the traditional system with T+1 settlement, but the experiment paves the way for shorter settlement cycles and a modernized market plumbing in the future. Tokenization offers clear potential benefits. A blockchain-driven approach could eventually enable near-instant settlement, true T+0 atomic settlement, and give companies and investors real-time transparency into who owns what. Rapid settlement reduces counterparty risk by eliminating the delay between trade and final clearance. Several major exchanges and banks in Europe are likewise testing tokenized bonds and other assets in controlled regulatory sandboxes. Crucially, authorities insist that existing investor protections and disclosure rules apply equally to tokenized assets, so innovation doesn't come at the expense of fairness or market integrity. Over the next decade, blending traditional market infrastructure with blockchain could redefine how value is exchanged. By 2030, certain assets might trade 24/7 around the world, with digital tokens allowing ownership transfers to finalize in seconds. Such round-the-clock, decentralized trading could boost liquidity and give more people access to global markets. Some even imagine markets one day extending beyond Earth, supporting trade in space-based enterprises. But for now, the focus is on creating faster, safer, and more inclusive markets here on Earth. These pilot projects are small steps toward a tech-driven, inclusive financial system that's ready for whatever the future brings. Disclaimer: the information in this forward-looking report is for news and discussion purposes only and does not constitute any form of legal, financial, or medical advice. These anecdotal stories reflect current trends and analysis. They should not be taken as personalized advice or guidance of any kind. Video description. In today's forward-dated finance news, July 7, 2026, we explore 5 massive shifts transforming money and markets on the road to 2030. First, we examine how corporate treasurers are leveraging AI and stablecoins to achieve real-time cash flow management and 24/7 liquidity. Next, we discuss the evolution of enterprise risk management as companies adopt AI-driven tools and adapt to new regulations in an increasingly complex risk landscape. Our third story covers the revolution in B2B payments and financial infrastructure, from the Federal Reserve's push for instant cross-border payments via FedNow to the surge in stablecoin adoption by businesses for faster, cheaper international transfers. In our fourth segment, we look at the boom in RegTech, where AI and automation are helping firms strengthen compliance and fight financial crime amid a global regulatory crackdown. Finally, we report on how institutional trading and market infrastructure are entering the blockchain age, with regulators greenlighting tokenized securities trading and exchanges gearing up for an era of faster, more transparent markets. Each story in this deep dive report balances a futurist, optimistic outlook with practical insights from today's news, painting a picture of a tech-driven financial future that remains firmly grounded in real-world progress. Note: this video is for informational purposes only and does not provide legal, financial, or medical advice. Video tags: Finance 2030, FinTech, Corporate Treasury, Cash Flow Management, Liquidity, Enterprise Risk Management, ERM, Risk Management Trends, B2B Payments, Cross-Border Payments, Real-Time Payments, FedNow, Stablecoins, Cryptocurrency, RegTech, Regulatory Technology, Compliance, FinTech News, Financial Technology, Innovation, Stock Market, Tokenization, Digital Assets, Market Infrastructure, Future of Finance, Tech Trends, E-Commerce, Global Economy. Base thumbnail. Title: Finance 2030 starts now. Visual: glowing digital globe surrounded by AI circuitry, stablecoins, stock charts, treasury dashboards, and tokenized securities. Hook text: 5 massive shifts changing money. Thumbnail variation A. Title: Finance 2030 to 5 financial game changers. Visual: a professional business executive at a futuristic digital dashboard with financial charts, currency symbols, and stablecoin icons, highlighting human oversight of high-tech finance. Hook text, 5 trends shaping the future of money. Thumbnail variation V. Title, Finance 2030, Tech Disruptors. Visual, an abstract AI brain or robot merged with blockchain circuitry and digital currency symbols, hovering over stock market graphs to emphasize technology's impact on finance. Hook text, AI and blockchain revolutions. Thumbnail variation C. Title, Finance 2030, The Final Frontier. Visual, an astronaut or a rocket ship against a starry space backdrop with Earth and digital coins or stock arrows, suggesting finance's expansion to new frontiers. Hook text, Money's Next Frontier, Outer Space?